Well, I'll have another question if nobody else has questions. So can you explain the liquidity situation? Because from my understanding, like Coinbase, like they have to get their Bitcoins from somebody, right? In order to actually have them readily available to people to buy them. So where's the reserve for Bitcoin? Is it just guys like you? Like, what's the reserve for
So the
Bitcoin?
way that the liquidity works, so the reason there's this crazy volatility. So in the US, you were talking about buying Caterpillar. So you go to your broker, how much leverage can you get on Caterpillar? 1.5 times, maybe.
Yeah.
Right? 50 cents on the dollar, maybe. If you're a hedge fund, a little bit more. In Asia, you can go to Binance, you get 100 to 1 leverage on Bitcoin. Think about that. That's insane. But all of those Asian exchanges are like casinos. I call it Macau 2.0. And so when you call Galaxy or try to trade at Coinbase, all of the companies like us, we're connected to 29 exchanges around the world. Right? Coinbase isn't really an exchange, it's a brokerage. It's like a Goldman Sachs, right? They got lots of customers and every once in a while they have enough customers that they can match them against each other. That's a great business. But the real liquidity comes in what I'll call like a black pool. And that black pool is these 29 different exchanges or 40 different exchanges. And so it's perps, and what's interesting is you look at the volume numbers of crypto, they seem giant, right? Binance traded $30 billion on Friday. A lot of that is high frequency guys.
Mm-hmm.
And so, because I try to sell like $20 million of what is Ethereum at one point on Friday because I thought I could catch it before it fell. And I got a shit fill. It was like, 4 or 5% lower. And I was like, how in God's name could my fill be 5% lower, on 20 million bucks when I saw the volume numbers of the day? Because those volume numbers are not real bids. They're HFT guys. They're constantly tweak. And they move that bid. And tell me if, I don't want to speak French when people don't speak French. HFT, high frequency trading, the electronic market makers that create tons of volume, but isn't real deep liquidity. And so crypto has liquidity. We get it from the whole community. A lot of it comes in Asia, and that's where the leverage is. So I would say probably 75, 80% of the liquidity is in Asia. The volatility in crypto comes from that leverage, right? It's not coming from the Coinbase accounts. They don't get enough leverage, right? Not coming from my customers, right? They're not leveraged up.
On the institutional side, if every bank and every hedge fund is going to lean towards crypto over the next 10 years, is the baseline for 7 to 12% annual return going to be dead? Or do you think that regulators will keep it in that sweet spot?
Give me that question one more time, because the returns have been a lot more than 7 to 12%, right?
Yeah, absolutely. But most are only saying that they can get you 7 to 12% for regulatory issues or for reasons. But if everyone is going to lean towards crypto now, do you think from a regulation standpoint that sweet spot or percentage base will be lifted, and now you'll be able to say that you're possibly able to give 20 to 40% return in a year if crypto is added to the balance sheet?
Listen, there's no free lunch in the world. So think about it this way. Here's an interesting way to think about what's happening. There's a pie called global wealth. It's $400 trillion. Let's shrink the pie to US wealth, about $140 trillion. What's making that pie grow right now? Chairman Powell, Federal Reserve, just pumping in money, literally like a guy at the carnival when he's popping the balloons. He just keeps pumping and pumping and pumping. And so global wealth is expanding faster than it ever has in lots of ways, right? And so stocks are up, bonds are up, everything's up. LeBron James trading card traded for 5 million today. I bought one for 1 million. I bought a LeBron James card because I kind of think LeBron James is the dude. Like, I think he transcends athleticism. Like, he is Muhammad Ali of his generation. That guy could be the president of the United States one day.
That's a fact.
And so I thought, I'm not invested in a basketball player. I'm invested in like a world leader. And because of that, that card's going to have value. I got one of his, golden rookie cards. And I thought this was an insane amount of money to spend, and now it's already worth a lot more. That's only happening because we have all this liquidity. So now we've got this pie like a pizza pie. 12 years ago, there wasn't a crypto piece.
Mm-hmm.
There was no crypto. So crypto's taking a piece of that pie. It's stealing from gold. It's stealing from stocks. It's stealing a little bit from everything. Mostly gold, but everything. And right now, crypto's $2 trillion, right? That's 0.5% of global wealth. Think about that. My thesis is it feels kind of intuitive that in 2 to 3 years, it'll be 2% of global wealth. So that's 4 times market cap. So crypto would be to 8 or 10 trillion dollars. So that means Bitcoin probably is 4 or 5 times higher. Ethereum's 4 or 5 times higher. Now there'll be moves between. And so to me, there is a once in a generation shift to create a new asset class. Asset classes usually end up something like this will be 7 or 8% of the portfolio, not a half. If you think about commodities or, and so we're in this transitional shift. So I think crypto returns will beat the crap out of stocks but not forever. They will hit an equilibrium, right? There is no free lunch in the world. Right now, it feels like there's a free lunch because the government's losing everything, right? We're winning and they're losing. They're just giving away the money.